What's up, everybody? Welcome to another episode of 10K on the Bay. Today we have a very special guest. We have Mark, not your dad's CPA, who's going to join us and answer some tax questions, which is really important because it's tax season. You have to pay taxes. The IRS is the most sophisticated bill collector in the world. We have Mark, not your dad's CPA, who's going to join us and answer some tax questions, which is really important because it's tax season. It's like my first time. You have to pay tax. Sorry. Okay, so just Mark, do you want to introduce yourself and let us know a little bit about your background? I lost that. Did I lose the audio? Let's see. Oh, here we go. I'm back.
Can you hear me now?
Yeah, we can hear you now. So maybe we can go over your background one more time.
Yeah. So the past 10 years I've spent in different various finance and accounting roles, but I always kind of resisted having my own like CPA practice, CPA firm, because I just thought it was too cliche. I was like, I'm not doing that. But after a while, I was like, I have the skills. Why not give it a shot, see if I like it? And it turns out that the thing I do like is being able to help people, being able to share the knowledge that I have to help them excel in their businesses. And another reason I like helping this community is I actually started doing more online sales myself a couple of years ago. So I primarily do private label stuff on Amazon through Amazon FBA. So that's been also fun to have on the side. So awesome. In a nutshell, that's me.
Well, I'm glad you could join us because there are a million tax questions that people have. And I also want to introduce Gwen and Noel, who are also on the call. Gwen, why don't you introduce yourself? And we're all going to be at the reseller event in Kansas City in early March, and maybe give a brief intro and let us know how your day is going.
Hey guys, so I'm Gwen. I am Sam Love Susie on Instagram, and today has been a day. My internet was out for 2 days, and with this business, when your internet's out, you really can't list or do anything. Like I can list on my phone, but there's just too many complications because I have templates. So I've just been photographing all day and trying to get as much stuff sorted and washed and ready to go. But yeah, that's about it.
Awesome. Noel, how was your day? How's eBay?
Hey, yeah, it's good. I did some shopping at the outlet today, which I enjoy. And then I got it all listed today. So I didn't expect to do that, but because I have a kid at home sick today. But it's my 11-year-old, so that makes it a little easier when she's home instead of my 8-year-old.
Yep. So I did, it is tax talk and it's a little bit potentially boring. So I did bring Sam the poodle to make it a little bit more exciting. He's probably going to fall asleep during the call, but I wanted to make the tax talk a little more exciting. And I think it's very, very important that you guys know what's going on financially, because if you can improve your vision, you can really make a lot of better decisions for your business. Joel, do you want to introduce yourself? No audio. Oh, I can't hear you. No audio. Can you guys hear? So
you're muted.
You're muted.
Okay, there I am. I had my earbuds plugged into the computer and I'm using my phone.
Mm-hmm.
My name is Joel Helene Pritchett. I go by Joel or Helene or whatever else name you want to call me. And I'm the other half of the Lister Sisters on Instagram. And I sell on a lot of platforms, but eBay's my favorite.
Awesome. Well, let's get straight into it, Mark. There's a lot of questions. If you guys have questions for Mark regarding taxes, please put it in the chat so that we can answer it. The very first question that I want to ask is the one I most commonly get, which is, what happens if I haven't started keeping track? I originally started just selling stuff around the house and it snowballed, and now I'm definitely making too much money to not report it. How do I just get started in this big mess and pile of receipts? We lost Mark's audio again.
It's not just me.
All right, how about now?
Perfect.
There you
Okay. I mean, so first, just, I mean, try not to panic or get overwhelmed. I mean, the first thing you want to do is take a step back and say, okay, what am I trying to do? And what you're trying to do is just present to the IRS a realistic picture of your profitability for the year. You know, that's what they tax you on. So that consists of your sales, of your revenue numbers, and your expenses. So, I mean, and there's a lot there. So I just say, you know, focus on one piece at a time. Start with your sales. If you haven't kept any records or bookkeeping, you know, of your sales activity, usually there's a record of that on whatever platform you're selling on. So you can go into eBay, go into PayPal, Amazon, and pull that activity, and get one, you know, nice round sales number. If you sell on multiple platforms, you might have to make a summary total of the different platforms, but then ultimately you're just getting one gross sales number that you'll put on your Schedule C, most likely, if you're a small business. So then you have your sales. So then the next big piece that you want is your cost of goods sold. You got to deduct all that inventory that you sold. And I mean, if you haven't been keeping track of that, it could be painful to try and get the exact number. I often, a lot of times, say it's not worth going through like every receipt. Like there are different methods you can use to come up with a pretty decent estimate of your cost of goods sold. I mean, I'm not going to bore you with the specifics right now, but it's possible. And then, I mean, if you don't have any other expenses, you know, a lot of your business expenses you probably put on your credit card or you'll have a record of in your bank statement. So what you can do is you can go download or export your credit card statement, your bank statement. And if you don't have a separate business account, you'll have to go through that bank statement and identify the business transactions and separate those from the personal transactions. And then once you have all your business transactions, you can classify them as, you know, office supplies or rent or, you know, materials. And then you'll have those categories to throw on your tax return. The next thing that people sometimes don't remember are some of the non-cash expenses that you can take advantage of. Like mileage is probably the biggest one. If you haven't been keeping track of your mileage, I suggest that people go back and recreate it. So then they have something to substantiate what they're claiming. And I mean, another thing you might not have a good record of are any cash transactions that you have. And for that, you might have to go back and find receipts. If you don't have any receipts, you can always just estimate a number if you're willing to, you know, take a risk, just knowing that if the IRS ever did call you on it, they could potentially take away that deduction. But if you know you spent it, I tell people that they should at least put it down and take the risk. So
I mean, that's very good advice.
So it's not the end of the world. You would just lose the deduction, like you wouldn't go to jail.
Right. Yeah. I mean, if you're making a good faith effort to prepare your tax return, if you spent that money, even if you don't have a record, I mean, they want you to, but if you don't, I don't see anything wrong with claiming that deduction.
Do the receipts that you put into, I personally think taxes are very exciting, for the record.
Fantastic.
But for the receipts that like you take pictures of to put into QuickBooks Self-Employed or whatever, do those count, or do you need to have the hard copy?
That's a good question. You don't need the hard copy. As long as you have a picture or a copy, you can toss those originals.
Sweet. That's awesome.
Awesome.
And then
go ahead.
Is it true? You might have already said this. I'm sorry. I keep getting distracted. So for gas, like on QuickBooks Self-Employed, it'll tell me when I bought gas and like swipe it'll tell me when I drove somewhere. So I either swipe, like I did it for work, like I went sourcing or something, or I swiped that it was personal, kind of like Tinder, like swipe left or swipe right. So do I then not use my gas receipts because I'm tracking mileage?
Right. So if you can it's an either or. You can either take actual car expenses, like your gas and your repairs, or you can take the mileage, but you can't do both because the IRS gives you the option. Otherwise, you're double counting.
You could do repairs too.
One or the other.
I mean,
Right,
like
so-
say you're doing gas. Say I pick gas. I can
Actual
also count
expenses.
repairs.
Yep, that's
So-
part of your actual expenses.
Oh wow.
So it'd be all the, and then I think, no, but yeah, definitely your actual expenses versus just a flat per mile. Like you add it all up. There and Mark, correct me if I'm wrong, but there's also a limit to that as well, right? You can't write off the expenses for a Lamborghini, probably not the full amount.
There are limitations for luxury vehicles.
Makes sense. So I want to get into the first question from the chat, which is from JJ Marley. Which category are eBay and PayPal fees?
So I mean, it depends if you're talking about like what category on your tax return or what category in your bookkeeping records. And as far as your bookkeeping records, I mean, I would just put selling expense. It doesn't really matter how you categorize it. I mean, it's not cost of goods sold. It's an expense. And I mean, at the end of the day, you're going to have the same net profit anyway. So it's not that big a deal, even if you get the wrong category on your tax return.
I know QuickBooks and GoDaddy and the other one that I've used before, like it doesn't have an option for inventory or e-commerce or whatever. So I think that's where that question comes from, because I wondered that too, but I just put in other or something.
It makes sense. You could put eBay under marketing as an expense. That's how I categorize that. And then PayPal under administrative. But I guess Mark is right, as long as it's in there.
It
Yeah,
just
and as
has
long
to be
as
categorized.
yeah, I mean, ideally you want to get it to something that is reasonable, that makes sense. But as long as you know where it is and you can back it up, I think that's fine.
So I have a question. When you report your, I think I know the answer to this, but I just want to clarify. Let's say you do $100 sale on eBay. You're going to get a net amount from PayPal. You're not going to get the full 100 and then pay the PayPal fee after the fact. So it'd be fee netting. They would give you the amount after the PayPal fees, but it's not the case with eBay. After the fact, you pay your fees after. So should you report the $100 as revenue, or let's say the $96 as the top line, if that's just what comes into your PayPal?
Yeah, and this applies to both your own bookkeeping records and to your tax return. You want to report the gross numbers. So you want to report the full picture of your selling activity.
Gotcha. Next question is, do you have to have an LLC in order to write off the deductions with the new tax law? Let's have a generic question, but.
So I don't think so. I think that like there's a new 20% business deduction and there are some limitations, but I think it applies to sole proprietorships and partnerships and S corps, because all those are flow through entities. It's a flow through deduction, meaning that the earnings from your business flow through to your personal tax return.
This is an interesting question. Ken is currently doing eBay as an individual, or I assume sole proprietorship, no employees, no liability or liability issues. With the changes in the new tax system, do you recommend going to a corporation?
No, I don't. I mean, that's a good question, and I don't think so, because even though the new corporate rate is really favorable, it's 21% now. Corporations are still subject to double taxation, meaning that the corporation itself is taxed at 21%. And then when you pull a dividend, you're going to be taxed on that again at whatever your income tax rate is. Whereas if you just stay as a sole proprietorship or an LLC, it's all just one time at your personal rate.
So Glass City Picker is asking, what are some common overlooked write-offs? This is probably a question you get very frequently.
I mean, some of the biggest ones with resellers that I see And it's not always that people don't overlook them. It's just that they don't keep track. One of them is mileage. A lot of the times, I mean, it can be a pretty substantial deduction. I mean, it can make the difference between getting a big refund or having to pay a lot, and people just don't take advantage of it because they haven't tracked it.
Really? Just on gas?
Yeah,
And driving?
it all adds up, especially for everybody who's out there doing all these sourcing trips and stuff.
That's awesome.
So Chips is asking a little bit of a troubling question, which is at what point do you need to file taxes? And I think you're due to pay taxes even if you earn $1, but you definitely can clarify.
Yeah, I mean, there are limited exceptions when you don't have to pay taxes, but in general, if you're turning a profit, selling online or any business, you'll have a tax liability on that. So I mean, if you're making less than $400, you're not going to owe any self-employment tax. But if you're making over that, you'll owe self-employment tax in addition to your normal income tax potentially.
Daniel's asking a question that comes up a lot, which is, what do you recommend for lot purchasing? Because some people do the average, some people do line by line, but what do you recommend?
Like when you buy in bulk? That's a good question. I mean, the easiest way to do it, if they're
item.
Yeah. If they're all similar items, I think it's just easiest to take the average, allocate the price evenly over the whole lot.
So yeah,
like write out every single item. Like on your spreadsheet, enter every single individual item, but just do an average cost on the cost of goods.
Potentially, I mean, it depends if you're gonna go list every single one of those items individually anyway. Then I would just make it part of your process, like putting them in your spreadsheet at the same time.
Your spreadsheet's awesome, by the way. We love it.
It's good to hear.
We all use it.
And guys, we're also going to recommend Mark's book, which I just finished this morning, and it's great. And you basically want to read as many resources as you can, in my opinion, because once you start getting going in your eBay business, tax should probably be your number one priority. Every time I started a business, and I speak to an attorney for how I should set up, the first thing they recommend is go talk to a CPA. So you definitely need to do that right away. There's so many different things that you need to know before you even get started, just so you can just have an idea of where you're going. Because eventually we want to get to the point where we're limiting our tax liability and doing wealth preservation at some point. So if you think about that from an early standpoint, I think it's hugely advantageous. Let's see here. This is also a scary question, but when should you include sales tax?
So sales tax is kind of it is kind of a scary issue because it's really complex, especially when you start selling a lot in lots of different states. But I mean, in general, you should be collecting sales tax for any purchases or for any sales that you make to customers who are in a place where you have a physical presence. So usually your home state where you operate out of, or it could be somewhere where you have a warehouse or an employee, but usually it's just your home state. So if you live in, Wyoming and you make a sale in Wyoming, theoretically you should be collecting sales tax on that and passing that along to your state. But I mean, in order to collect and pay sales tax, you need a sales tax ID generally. I wouldn't let the fact that you don't have that yet stop you from getting started or from continuing to sell. And I mean, yeah, technically you should have it. But I get the non-CPA in me would say, I mean, there's so many people out there who have been selling for years and they're still not collecting sales tax. It's just so hard for all these states to enforce. And I haven't seen any penalties yet. So just as long as you get around to it when you start making a lot of sales, I think you're good.
Mm-hmm. So here's kind of an odd question, but I called PayPal earlier this week to ask about how friends and family payments, do they show up on the 1099 that they send out? And they said they do not. So if somebody buys moonshine from someone through a friends and family payment, how would you properly record that?
As the recipient?
Yes, as the person selling the moonshine. Somebody pays them through a friends and family payment, which would not be recorded from PayPal.
Yeah, so I mean, if you wouldn't see it on a 1099 from PayPal, but you would still have that in your own books, in theory, and you would just deduct it like normal.
Got it.
But then I could be a millionaire from just selling moonshine to all my friends. Right?
Well, you would have it on your own books, but PayPal wouldn't report you, basically.
Oh, I see what you're saying. Okay. Well, there
So-
goes that idea.
So Chips is asking a decent question, which pops up a lot. Well, how do you write off items that don't sell?
How do you write off what?
This is a kind of a trick question, but how do you write off items that don't sell?
Cost of goods for items that haven't sold for 3 years or whatever.
Right. So if you have obsolete inventory or damaged inventory, you basically you can donate it or get rid of it. It doesn't really matter what you do with it as long as you don't have it anymore. And then it goes to your cost of goods sold, just like as if you sold it. So it's like you sold it for $0.
Oh, okay. What about your own stuff?
So that's a good question. A lot of people sell a lot of their own stuff. And usually whenever you bring it into your business or convert it to business inventory, like at that moment is like you'll assign whatever cost, like a reasonable cost at that moment. So whatever the fair market value is what you'll call the cost, and eventually the cost of goods sold when you sell it. There's a lot of leeway you have there, like in terms of how you evaluate or estimate what that number is.
So do you think that it's in someone's favor to err on the side of profit or err on the side of cost? As far, like, let's say I bought something full retail price, wore it for 4 years, and then I'm going to go sell it. Do I want to show more profit or do I want to show more cost?
It's advantageous to you to assign that item as high of a cost as possible, because that'll reduce your taxable income.
Cool. And what if you still kept the receipt? Could you, even if it's 5 years ago, could I still claim the full value? Or is there depreciation?
No, you wouldn't claim the full value because that's something that people could abuse. Like if that's just a way that people could end up paying less tax, which is why when I say when you convert it to a business item is when you assign it the new cost.
Okay. Oh, I see. Yeah. Okay.
And in a lot of circumstances, I've heard it's basically the actual cash value or market value of the item is like a reasonable amount. So if the sold, say the item's worth $30, that's your cost of goods sold. If you buy it for 30 and sell it for 30, there's no tax liability there. So that's kind of, but it'll get fuzzy if you put a $5,000 cost for it.
Exactly. It can be fuzzy.
So you can be creative, but remember, people are watching.
I try to keep mine like around the same price as my cost of goods that I purchase at a thrift store, just so I know, because I've already purchased those items, I've worn them. So if I pay $5 for shirts, I kind of estimate it at $5 just so I know where I'm at. Is that kind of more on track?
That's one way. You could say, okay, I know that I could get this for $5 at a thrift store. But then at the same time, you could say, well, I'll probably sell it for $20. So another thing you could do is just take the average of those two. So then say it has a cost of like 13 or something.
Okay.
So I actually like this question. Well, two questions. I'll start with a basic one, which is, does education towards your business qualify as a tax deduction?
Yeah, that's a good question. And it does. If you're doing it for the purposes of furthering your business, then it's tax deductible. And that's when I announced my book on my Facebook page, like I didn't even say that it was tax deductible, which I was like, how could I have forgotten to say that? But
Yeah.
it's tax deductible, so that's cool.
Okay. No, and I think that's important. You should be upgrading yourself and constantly reading materials and courses, because I think that's very important for you to upgrade your mind and be a better business person. So this is kind of a question I'm going to modify. What's the difference between me just going to H&R Block versus a CPA?
That's a good question. I mean, I'd say in general, you can't go, well, I don't know. I've never gone to H&R Block, but I've heard stories of it being good for people, but then I've heard, the person, I don't really know how to answer this. I mean, so you go to H&R Block, the person who's sitting behind the desk is not necessarily going to be familiar with e-commerce or so a CPA is kind of more of a trusted advisor who's usually more familiar with your financial situation. It's someone you can have a little bit more time with. It's just
better.
A CPA is somebody you could get a referral for. You don't always know what you're going to get when you're walking.
It's just better. It's just better all around.
Okay.
And I also want to maybe you can make the distinction between not all CPAs. I mean, not all accountants are CPAs.
Right.
Right. I mean, there are a lot of these terms are used synonymously, like bookkeeper, accountant, CPA, but they're technically they're different. Accountants are technically a level up from a bookkeeper. They can do things in like the general ledger of companies and just different accounting things. CPAs have even more training. Some specialize in tax. And I don't know. It's good just to be aware that there are different levels, so to know what you're getting.
This is an interesting question from Purple Haze. I like your screen name. Let's say you're to buy some shipping tape to use for shipping your materials, but you don't use all of it, so you only use some of it. Can you write off the entire tape or just the tape that you use?
Yeah, you write off the whole tape. I mean, if you purchase it for your business, if you spend $10 on your tape, you just expense it right away.
Perfect. Let's see.
Can you expense your dog if it helps you list faster?
I'm gonna have to say probably not. But I can look into that. I'll look into that one.
Let's talk about a travel vacation. Let's say you take a 1-month vacation around the world and you buy one keychain to resell. Does the entire thing become a write-off?
No, but if the primary purpose of your vacation is to source goods, and maybe 49% of it is vacation, you should be able to write off all of the travel costs. It's all about your primary purpose.
Perfect.
So that would mean like everybody going to our Kansas City meetup and conference could be expensed for them, correct?
Yeah, absolutely.
Because it's an educational conference, and if they thrift while they're there and they're working on their business, then that counts.
Yep.
Yeah.
It technically should qualify even if they don't thrift, because it's
Right.
just for the primary purpose.
To learn.
Mm-hmm.
So does it then become a he said, she said thing? Like
my primary purpose of my trip around the world was to get that one keychain or to thrift, but I only found one keychain in the whole world that I wanted to resell.
It's fuzzy. It's one of those fuzzy situations that your CPA is going to talk to you on an individual basis for sure.
And then what about like space, house spacing? Oh, is he still here?
Yeah, Mark's he's still here. Yeah.
Okay.
I mean, that's a great question. I love the question of how do you do the home deduction?
He was green on my screen. So
Yeah.
let's say like I'm in the process of moving my entire operation to my basement because it until this point has been all over the house and in the garage, but now I'm putting it in everything down in the basement. But I also have an Xbox and a television and a couch in the basement. So does that mean that I can't use my basement as a workspace deduction?
So it depends. The rule is, or the main tenets are, I guess, that you have to have regular and exclusive use. So if you use it regularly for your business and exclusively for your business, that's the main test. So I mean, if maybe half of that space,
yeah, so definitely half. So half of the space like is all of my stuff where I work, and the other half is the kids' toys and the Xbox and where they play. So even though it's the entire basement has the Xbox and TV, like I can count half of it. Does that count?
Right. If that's your half that has that regular and exclusive use, then that's the square footage that you would apply to the home office deduction.
And I don't have a TV in that section. Why can't you have a TV? Like, why can't that be part of your work?
I'd have to check on that. I don't know if having a TV in there for business purposes, and you watch it
like,
while you do your work.
What if TV is like a fidget spinner? Like, I can't really work unless I have background noise.
I would have to double check on that one.
So I have a question. So let's say you have a specific amount of space. So for me, I have 1,200 square feet that I use exclusively for eBay, even drawn out and on video. So it's going to be legitimate. Can I write off what I actually pay for rent, or can I write off the going rate in the area for the space?
For the home office deduction?
Yes.
So you can either do the simplified method, which basically gives you a deduction of $5 per square feet, up to 300 square feet. And that way is really easy and sometimes more beneficial. Or you can do the traditional method where it takes, the percentage square feet in relation to your whole house and applies some of your indirect expenses like your mortgage interest, your homeowner's insurance, your property taxes, utilities, your rent. Okay. And so, yeah.
So I have a couple rapid fire questions. If you had, I've heard from a different CPA that there are some reasonable startup expenses that an IRS will allow. Like, let's say like up to $10,000 for legal or talking to a CPA or basic supply shelving. Is there an amount that you would recommend? If somebody says, Mark, I want to start a legitimate eBay business, I'm not doing it as a hobby. Like, I have a little bit of capital, I want to do it right. Is there like a certain amount? And then follow-up question to that is, can you lend yourself that money? And is that tax advantageous as you, a person lending to your eBay business?
Like giving your eBay business a loan?
Yeah, from your personal.
I mean, there might be reasons to set it up that way, but generally for a small business, I mean, if you're making interest from your business, it's all your money anyway. So I'd have to look at the specific instance of that to tell you whether it'd be beneficial or not. Okay. I think it just depends.
Okay. How do you report personal items that you sell under your business eBay account?
So I mean, you would just convert it to business inventory, like a normal inventory.
Mm-hmm.
So the only difference when you sell a personal item is you won't have an actual cost that you paid for it. So like we talked about earlier, you'll just have to assign a cost.
And do you need a receipt for that assigned cost? Like, how would you do that for cost of goods?
So I don't think you would need a receipt because I mean, that's getting back into personal receipts that are probably years old. So I think,
Yeah.
I don't know if you had some kind of log where you wrote it down and maybe a note about how you estimated it. Like the IRS just
okay.
wants to see some type of like documentary evidence. So in that case, it'd probably just be jotting something down.
Like I use the average cost of solds on January 12th or whatever.
Yeah, I mean, I honestly don't think it's that big a deal. If it's just like a personal item or two here and there.
This is a really good question. What happens if you take out a PayPal working capital loan? Is that loan considered gross income?
No, it would just be a liability.
Got it.
So on your balance sheet, maybe what would be, I mean, you would deduct like your interest payments as expenses, but the loan is not income. Eventually you're going to pay it back and those aren't going to be expenses either.
Let's see. What questions should I be asking when looking for a CPA? Fantastic question and a great chapter in your book.
So one thing you would want to ask is if they have familiarity with e-commerce businesses. And actually this is one thing that I say sometimes is they don't have to be an expert in online selling or reselling. As long as they're familiar with inventory-based businesses, they should be able to be fairly helpful. I mean, you want to ask like about their fee structure. Is it hourly? Is it flat fee? You know, will they be available to answer questions outside of tax time? Those are a few of the big ones I would recommend asking.
You want to ask their astrological sign to make sure you're compatible. I'm just kidding.
Exactly.
But yeah, you definitely want to give them an idea of your personal situation, ask what they're familiar with, because some people use eBay to buy real estate, or they use it to there's so many different ways to use eBay. So make sure the CPA you pick can guide you towards your goals, ideally. How do you feel about using a CPA local that may have less online experience versus one out of state that has online experience?
It seems like everything now is going online.
Mm-hmm.
I mean, there are a lot of virtual CPAs popping up. I mean, that's sort of what I focus on. I do most of my work virtually. Some people, I mean, if you feel more comfortable working locally face to face with somebody, that's fine. But I don't think there are many reasons anymore why it would be a bad idea to work with someone virtually who's in another state. I mean, CPAs generally can.
That being said, you can do all of our taxes, right? Like no matter what state we live in.
Yep, I have clients all over the
Not like
United
being
States.
an attorney where you have to pass the bar in whatever state you live in.
It used to be like that, but now most of the states have like reciprocal agreements. Or
would it be beneficial to use someone like you who has e-commerce experience over someone local, even if they're local?
I think it just depends on personal preference. I don't see working virtually as being inferior to being local.
But since e-commerce is such its own cup of tea, like wouldn't someone with e-commerce experience benefit a reseller better?
In theory.
Yeah, that's what I mean. I don't think local versus virtual should be the decision maker. you should go with whoever has more experience in your niche.
Amazon Star 99 is making an interesting point. He or she says, I think the IRS looks at patterns to determine if it's fraud or a legitimate business expense. Like, for example, if you are regularly ordering office supplies once a month for the last 12 months versus buying a Hummer randomly on the last day of the year, it's going to, raise a red flag. So try to do things that make sense.
Yeah, that would be more speculation on my end. I mean, I'm sure they have. I mean, I know they have. They probably have algorithms and stuff that can detect fraudulent items, but I could almost guarantee that they're not looking at that like in the hundreds and thousands of dollars. They probably have a lot more zeros behind the patterns that they're trying to detect.
Absolutely. Lauren Cole City Loot says you can write off pet stuff if you claim a guard dog. I don't know.
Or a therapy dog?
Or a therapy dog or a guard dog. And I guess a similar question would be, what about a what about security system?
I don't know for sure about the guard dog off the top of my head. I'd have to research that. Security system would depend, I think. I don't know if the security system factors into the home office deduction. If you had a separate storage facility, I'm pretty sure you'd be able to write it off. But otherwise, I'd have to verify.
So you could prorate like maybe if your security system costs $100 a month and you use 20% of your house for inventory, then you could maybe write off 20% of that kind of thing.
Potentially. I mean, that's how it works with like your rent and your mortgage interest and stuff. But I don't know. Security systems might be specifically excluded. I don't want to say that though, because I'm not sure off the top of my head.
Rent and mortgage? What about property taxes?
Property taxes are factored into the home office deduction.
Nice.
So like what if it's not my house? And what if I also have like a storage facility? So my inventory is in 2 storage units, and then I also have inventory stored in my house and my home office. Can I do the home office deduction and write off the storage unit as like a warehouse?
I believe you can still take if it's not your house, if you're not paying the rent, then I would probably not take the home office deduction. The storage units.
Nobody has to pay rent because my parents own it. So like, that's a weird one because it's like, it's not really my house, but I live here, but I don't pay rent, so.
Well, and if you're not paying the property taxes or the homeowner's insurance or things like that, then probably not.
Okay.
Unless yeah.
I have a semi question, and I already know the answer, but people are saying, if I have losses in one business, can I use it to offset profits in a different business?
Yeah, generally, yeah. Especially if you're like a flow through business, like a partnership or sole proprietorship, that all flows through to your personal return. It all gets netted together anyway. So they all get netted together.
This is a good question. What is the first step when you are overwhelmed?
The first step, when I say this in my book, I say the first step is just not to panic. I mean, maybe give yourself 10 seconds to panic, but then after that, you got to get to work. So, I mean, you just have to identify what your end goal is. If it's doing your taxes, then you just have to go through systematically one at a time, one step at a time, kind of like I talked about in the very beginning. I mean, it's just tackling it piece by piece, I'd say.
What percentage of your utilities can you write off, and how do you determine a proper percentage?
So if that's part of the home office deduction, So whatever tax software you're using, or if you're just using the tax form, it guides you through that. It asks you what your square footage is of your office space versus the total square footage of your home. And that gives you a ratio that it applies to those eligible home office expenses like utilities.
Koan is asking a pretty basic question, but why would you pay tax on something you bought new, sold it on eBay, and then I sold it on eBay? I've already paid income tax and sales tax. Isn't that double dipping? I guess he's saying he'd be paying income tax and sales tax on the same item, and that's what I think he'd use a reseller license for to avoid that sales tax in the beginning.
Right. If he's not using some kind of reseller certificate, he probably is paying sales tax on those items that he's using his inventory, and then, theoretically collecting sales tax for those again. But he should not have paid sales tax in the first place. And if he did, then he's out of luck.
Can you start depreciating a newly purchased business asset, such as a warehouse building, the year it was purchased, but before you place it in service? That's kind of a mouthful.
So start depreciating when you purchase it, even if it's not placed in service.
Mm-hmm.
That's a good question. Probably depends, but what they mean is placed in service.
I guess they purchased it before it was used for storage or something like that.
I mean, so if maybe that would classify it as still a personal item, like it hadn't been converted to business use yet. So in that case, yeah, I'd probably start depreciating it when you place it in service.
Do certain CPAs have better skill sets? Or I guess I'll reword this one. What skill sets should CPAs have to help e-commerce sellers? Kind of a loaded question that helps you.
Yeah. I mean, CPA, it is a fairly general term. They can be sort of general, or they can have a specialty, whether it be tax or auditing or forensic accounting. But I mean, you want somebody who's familiar with inventory-based businesses and, has good basic accounting skills, who's familiar with the tax implications. Basically somebody who's just familiar with the industry and
So you're providing a couple of resources for resellers. Do you have both a spreadsheet and a book, or can you go over the resources that you've developed for people in our situation?
Yeah, I mean, I've developed a few simple tools that people can use just as I have gone along and gotten questions or helped people develop spreadsheets. I've posted a few of them in my Facebook group, Accounting for Online Sellers. I have some of this stuff posted in there, but I mean, one is just a simple spreadsheet, because a lot of times people want to know, how should I be keeping track of my items? And at a minimum, you can use a spreadsheet that has the item description, the purchase date, the purchase price, the sale date, and the sale price. Those are the minimum things you should have on there. And then if you're keeping track of all that information, at any given time, you'll know what your cost of goods sold is and what your current level of inventory is. So I mean, that's I have two different spreadsheets that can help you do that right now posted. Another thing I just posted a week or two ago is like sometimes people ask about if an S Corp would make sense for them. And I have just a spreadsheet that shows a simple calculation of how an S Corp can potentially save them money, depending on their level of profit. So just stuff like that. And then I have my book where I tried to expand on all the questions people ask me.
Awesome. So I have just an observation from talking to so many different sellers. I would say that 90% of the sellers that I talk to that do $100,000 or more in sales have a custom spreadsheet because they track different things than other businesses. So I don't know from your experience if you think that you should try to make your own, because I guess for me, from observing thousands of sellers, it seems like you should work with a CPA to develop your own specific spreadsheet. But I don't know what your opinion is on this.
I think that's a good idea. I mean, you ultimately have to find a system that works for you. I mean, there are certain things you should be doing, but you have to tailor it to what metrics you're looking at, to what you want to track, depending on what you sell. So I think that's a fantastic idea. And me personally, I love spreadsheets. I like making them better. But one thing is there are a lot of, maybe old school CPAs out there who aren't as good in Excel. I mean, I want to say that I'd like to think that most are pretty good in spreadsheets, but not all of them.
Okay, and I have another question. How many years of not recording any profit becomes suspicious for the IRS? Because there's a lot of comments and a lot of people that I have worked with or seen are not paying taxes at all. So I think it's going to obviously eventually catch up with them. But I'm asking, let's say you run a business at 20,000 revenue and 20,000 in expenses your first year, which is common for a startup. But if you can't do that every year and really expect the IRS to believe you, or what's your opinion on that?
That's a good question. It depends on what kind of numbers you're reporting. I mean, I don't know, is the loss remaining constant? Is it getting bigger? Is it getting smaller? I mean,
makes sense. Again, patterns they're going to be looking at.
Yeah.
If you go from 100 to 500 to a million, and you always lose.
Yeah, they'll look at it in relation to your total revenue and everything.
Mm-hmm. So Amazon Star 99 is asking what your opinion is on the new 20% flow through. Do you recommend an S Corp or an LLC with the new laws?
I believe it's also applicable to sole proprietors who meet the requirements. So I wouldn't say it's a reason to go form an LLC or be taxed as an S Corp right away. An LLC mainly depends on, the main benefit you have in an LLC is liability protection, which becomes more important as you grow potentially, and also depending on what industry you're operating in or what you're selling. And then an S Corp can save you a lot of money depending on how much you're selling. It can shield you from a lot of those self-employment taxes is the main benefit of an S Corp.
What is a reasonable salary to pay yourself in an S Corp?
So that's the main thing with an S Corp is when you elect to be taxed as an S Corp, you have to pay yourself a reasonable compensation. And there are a bunch of tests that the IRS has to kind of help you determine, okay, what's a reasonable compensation for me? But I mean, it's essentially like what is the market paying somebody who's doing what you're doing? And a lot of people try and abuse the reasonable compensation requirement. Like they might say, okay, I'm only going to pay myself $10,000 a year, when really maybe that the market says they should be paying themselves $50,000 a year, because then they only have to pay those FICA taxes on that 10,000, and everything beyond that, all the additional profits, won't have that self-employment, that 15% that you're used to getting as a sole proprietor.
Okay. How is there a limit for donations?
That is a good question. I mean, not that I'm aware of off the top of my head. Well, I take that back. I know on the personal side, for charitable contributions, like you can't deduct more than 50 or 60 now % of your adjusted gross income.
Wow, that's high. That seems high. 50 or 60%.
Yeah.
That's
But
insane. Time to donate your death piles, guys.
for your business, it's not so much a donation as it is you're just kind of getting rid of your goods. So it'll all flow through to your cost of goods sold anyway. So in that sense, there's not a limit, but it kind of depends how you frame it.
So I want to be respectful of your time. So I'm just going to ask a couple of more questions. And feel free to chime in, ladies, if you guys have a good one. But is there a time when you recommend, or is there a good time to incorporate?
Oh, I was like, incorporate what? I was waiting for the rest.
That's it.
So, I mean, incorporate, it depends what you mean. I think technically incorporate refers to like forming a corporation. And if I don't often recommend that people form corporations. There are certain reasons a small business owner might want to do that, but in general, you'll want to start thinking about forming an LLC. Again, if you are growing a lot and you anticipate to keep growing, you might as well do it now, and it'll give you that additional level of liability protection. You know, if you're dealing with more vendors, more customers, things like that.
So I only have one more question, which is there anything like Inventory Lab for eBay?
I don't know if there's anything quite as like extensive as Inventory Lab, but there are some other, I know they have like Excel-based tools that export all of your eBay information. There's one called like Easy Auction Tracker. There's another one called My Cost Pro. And I mean, they're just really simple Excel-based tools, but they're also really helpful because they export all of your data right there, and you can use that to be sort of your inventory tracker.
Awesome. Well, I guess we'll lead this into the closing. I hope you guys come and visit us in Kansas City. Why don't we start with Gwen? Do you have any final thoughts on accounting and our reseller event?
I think one thing to remember is on Poshmark and like Mercari, those kind of platforms, they don't, they take their fees, but they don't charge sales tax. They don't have any way for you to track any of that. You can request to get a report of your sales, but like they don't give you the same 1099 that you would get through PayPal. So when you use those platforms, I think you have to be a little more diligent with tracking. But yeah, I'm really excited to go to Kansas City and hear Mark speak and learn even more about accounting and taxes.
Awesome. Noelle?
Yes, I just want to ask one thing really quick before we go so I can sleep at night, hopefully. What percentage of people get audited, would you say, like that maybe make under 150,000 or something?
Yeah, at that level, it's going to be, I think historically it's been less than 1%.
Oh, seriously? Less than 1%.
Yeah, if you're making between 0 and 200,000, I think your chances are not very high.
You're a good man, Mark. Thank you.
Yes. Anything's possible, though.
Mark, I want to thank you. I really enjoyed tonight's show. And thankfully to you, Chris is going to hang this call up because I could sit and ask you questions for like 9 more hours. But this is just a teaser. That's what I want to say. Like, this is just a teaser for what Mark's going to give us in Kansas City for the weekend of the Reseller Fam Live in Kansas City. And I'm very excited. I can't wait. And I'm going to make sure that Mark's at my table because I need to get all the knowledge. But we really appreciate you, Mark. You are a vast tub of knowledge. That's not even a good acronym. I'm sorry. But
everyone follow
really
Mark.
Appreciate all of your knowledge and the fact that you are a reseller as well. So you know where we are, what we do, how we do it, and how the best way to do it. So
everybody follow Mark on Instagram and Not Your Dad's CPA, and your Facebook group once again.
It's just Accounting for Online Sellers on Facebook.
Awesome.
And everybody buy the book.
Website.
Everybody buy the book. Everybody buy the spreadsheet. Come see us in Kansas City. I just want to stress one more thing about networking. You become the average of the people that you surround yourself with. So if you're surrounded by full-time people who pay their taxes properly and level up and learn, I think it's super, super important because, you know, if you upgrade everyone around you, it's going to upgrade your life. And networking is huge. I mean, I would say if you want to pick one theme for 2018, it should be upgrading the people around you. It's really going to make a huge difference on your business.
And buy Mark's book. It's on his Facebook page.
That's right. And the link below. So
Yes.
thanks, guys. Mark, thank you so much for your time. I appreciate it so much. We could ask you questions all night, but we'll see you guys. We'll see you guys soon for potentially a part 2 if there's enough questions. And we'll see you guys all in Kansas City as well.
Yay. Bye. Thanks,
Bye.
Mark.